Good afternoon, everyone. This is Wyatt McAfee with Building the Ozarks, and we want to say welcome back to another exciting episode. This week, we are here with Luke Dawson from Bell Bank. Luke is a local mortgage lender, and I wanted to have him on here to discuss everything when it comes to the finances of building your dream home. So first and foremost, Luke, thank you so much for joining us this afternoon. We really do appreciate it. Can you tell our audience a little bit about yourself, how you got into the mortgage world, and just kind of what brought you to being on the podcast today?
Yeah, sure. So for me, grew up in the area from Table Rock Lake area, met my wife in high school, stayed together, came up to Springfield, came to Springfield and got in lending a little bit the same way, weird enough. So I was in the Army, so did Army National Guard after high school, went to MSU, really had no clue what I was going to do like most people. And I actually had one of my sergeants worked for Veterans United in Columbia and said they were opening an office down here. Got into lending, had no clue what was going on, and then 5 years later, here we are.
The rest is history, right?
Yeah.
Oh, and obviously, just coming from the military world and then kind of jumping into the lending side, being young, like there's a lot of craziness in life already at that point. And then, obviously you and I have chatted previously to being on the podcast, but I know your mortgage career has gone well. And, you recently moved over to Bell Bank. Can you tell us just a little bit about that transition period?
Yeah. So Bell Bank, you've never heard of it.
Nope.
Bell is actually a large bank. They're about $16 billion in assets, based out of Minnesota and mortgage office in North Dakota.
Yep.
I mean, we're in multiple states. So Arizona, Missouri, Nashville office, like it's growing.
Right.
And so had established office in Kansas City and St. Louis. And then they basically approached me through a mutual connection to open an office here in Springfield.
Right.
And so got that up and running in March. Everything's going kind of very quick, which is good. And we do have a very lucrative construction product. So it'd be good to kind of dive into that today with you.
Well, and, you and I met at the Parade of Homes. And so, obviously during that event, it's everything construction related already. We had, thousands of people going through new construction homes here in the Ozarks, everything from spec homes to, high-end custom-built homes. And so, just our meeting was very organic. It was right after I finished up another 4-hour podcast, which thankfully we're not going to be here for 4 hours today. But then, once you mentioned some of the products that you have available, as the new construction specialist for our team, dealing with those conversations with our clients all the time, trying to connect good resources, when you and I talked, it was like, okay, I got to have them on the podcast.
Yeah.
We got to get some content filmed about this, and we got to push this message to the masses, right?
Right.
So thank you for being here. We really do appreciate it. Kind of jumping right into the start of the conversation. All this boils back to the question, what is a construction loan? You're obviously a mortgage lender. You're not a builder. We're here to focus on more the financial side of the conversation. So can you tell us a little bit about maybe what the industry standard is when it comes to a mortgage loan for construction? And then we'll kind of jump into some of the specifics about Bell Bank.
Yeah. So there's two different kind of routes you go with the residential mortgages. One would be existing homes.
Correct.
So lots there, house is already built. You're probably buying it from someone.
Right.
There's standard products for that, down payment assistance, everything we already know.
Bread and butter.
Right. Yeah. And then so when we're looking at new construction, we're looking at actual, you have the lot and you want to build on it, or you're wanting to build a custom home and you're going to go to a builder, go to a great realtor like yourself, find a lot and get a build going.
Right.
And so the real difference in financing comes into a lot how for an existing property, the lender for lender A, right? They're going to look at the property. They're going to get you your loan, and then it's going to be sold to a servicer.
Right.
And so with Bell Bank, to touch on that real quick, the main thing for all of our products is we service them all. So we'll get the product, close the loan, and then it's serviced by us.
Keep it in-house.
Right.
People,
So for the construction, what helps is that we also do all of our construction and service ourselves as well. And so we can have some pretty good loan to values, different products like that.
And just flexibility, right?
Yeah.
And I think that's the big thing in today's world. Because like a traditional construction loan, right? You're looking at larger down payments, right? And people are obviously dealing with a lot of expenditures already when it comes to the build process, right? Sometimes are they paying on two mortgages? Do they now, well, two loans, I should say, the mortgage on their existing home. Then, like you said, are they buying the land? Are they assuming the payments on that? And then how long are they paying on that until the actual construction process is complete? Then they can move. Now you still have two houses as a part of the equation.
Right.
Timing becomes a big conversation in all of the minutia of this process. And so obviously for a lot of buyers out there, speaking especially as a real estate agent, I know a lot of people they like the idea of building.
Right.
But for most, it almost seems like it's just never a tangible possibility, right?
Yeah.
And to be fair, like that's not always a inaccurate assumption just based on somebody's specific situation, right? It's not a one size fits all type scenario, but just in our conversations, Bell Bank is doing things to help make it a bigger possibility from the financial side of the equation for the general public, right? So kind of stair-stepping off of that, can you tell us a little bit about what makes Bell Bank specific, and then we'll get into what the process looks like?
Yeah. So, I mean, the best analogy for it is we've all heard the same, you have to have 20% for a down payment for a house, right? Yep. And then there's advances in mortgages, there's mortgage insurance, there's FHA loans, and that's brought the down payment much further down.
Correct.
So we're on that same train when it comes to construction loans.
Yep.
And so if you go to any traditional bank, it's going to be 20% down. You can finance the land with that. It's going to be a 7.25% rate or whatever prime rate is for commercial lending at the time. Probably a 1% origination fee. And then you're going to have two closings.
Right.
So you're going to do a construction loan through the bank.
Yep.
And then you're going to do a refinance at the end to get a permanent 30-year mortgage.
Right.
And so we've kind of come in and erase all of that.
Yep.
Yeah. And so we do what's called a one-time closing. So you come in, you get the construction loan, and your permanent financing is done in that as
process.
Well.
Right.
And so it's about and we can still do them in 30 days. I mean, it's a 30 to 45 day process for that. And we only require 5% down.
Which is huge.
Right.
For those of you who are out there, the difference between 5 and 20% on new construction costs can be a lot of money in your bank account, right?
Yes. Yeah. I mean, because when you're talking about, when we're looking at a normal build, it's probably starting around at least 250, maybe 350 to build
basically anything with a pulse these days.
Right, yeah. But when we're talking 250 at 20% down, you're looking at $50,000 just to build a house. 250 at 5% down, we're looking at $12,500 for the down payment.
Yeah, so you're keeping almost $40,000 in your pocket at the start of the conversation.
Yeah, and honestly, the biggest thing too with us not requiring 20% is you might not have 50, but you might have 30. But still, a traditional bank is going to require 20% no matter what.
Right.
And for us, we can do a loan to value you could have a 9% down payment or 12%. It's not really fit in certain categories as it necessarily has to be 5 or 20. Right. But it opens up a huge range of buyers. Yeah. To be able to go in there and
provide
build
options,
something that you want.
Right. And like I said, it's not a one size fits all, but also at the same time, like construction, it's a solution to a lot of problems in housing these days. And that's much larger conversation for another time. But like I said, there are a lot of people who want to build a new home. They're open to the possibility, and there's a lot of great builders in the area. So how do we make it more obtainable for the average person, right? Yeah. As a realtor, one of the fun things that I always say is, I can sell a house to anybody with an 800 credit score and $200,000 in the bank. Yeah. But for the rest of us, 99% of human beings on the face of the planet, how do we actually make things happen, right? And flexibility is really all that boils down to, whether it be on the personal side, the lending side, what somebody's looking for in a home. The more flexibility you bring to that conversation, usually the easier it is to accomplish whatever your desired real estate goal is, right? And so that's, obviously precipitated kind of the start of why I wanted to have you on the podcast is Bell Bank is offering a product that is not common in our industry. How do we make more people aware of it to make a construction process, owning your own home that you had built, more obtainable to the masses, right? Yeah. And at the end of the day, we want to see people in the homes that they like and they love, and they're invested in their community and all of the other things that are a benefit because of that. So can you kind of walk us through what the process looks like for Bell Bank to get somebody from, hey, I think this is something that I want to do, to qualified money ready to spend, just so that way for our audience, if they're kind of planning on this, let's give them some coaching, right?
Yeah, sure. So the initial process is the same as purchasing, right? So it's the same application. We have a complete online platform. We have an app built out that can go on. It's just gonna be looking at assets, income, credit, same thing. The main difference between building and purchasing is just it's a 700 minimum credit score.
Okay.
So if they're not there, we can get them there.
Right.
We have free credit repair as well. So I have a client right now that's 630.
Yeah.
And we're getting them up to a 700 by paying off different debts.
Yep.
We have a platform we can run, get that up. So that's number one, is being it there. And then it would be, getting a plan together for, there's really one main question. It's, do you already have land? So if you already have land, we can use the equity in the land as well.
Nice.
And so, like, for example, I have a client right now, they're paying no down payment. They have land that they own outright. I mean, it's 1 acre.
Yeah.
Too. It's nothing crazy. It's not like they were gifted 70 acres,
or
right?
something. Yeah.
And they have it. So, but that 1 acre can cover the 5%, because we're not talking of, a huge amount of money here.
Right.
And so the equity of the land can be included in the down payment.
And, even that I know it might not be like the norm or abnormal, but I have talked to lending institutions in the past where they really don't want to touch the land as a part of structure in the deal, right? Just because for their unique lending institution, it really didn't make sense for them, right?
Yeah.
And so how do we, if somebody goes out and buys a 1 acre lot, there are lots here in the Springfield area that are selling for 6 figures at that price point, right? Yeah. So they've spent real money on that. How do we leverage that as a part of this scenario, again, for the betterment of the buyer / client / customer in this situation? We all of us want them to succeed, right? And so, just like you said, if they've already got the land, more the better, right?
Yeah, it makes it a little bit more streamlined on there, so for the people that don't have land, really what we do is we start the application. I will tell them, hey, this is your max pre-approval amount. So you're at 500,000 max, 400,000 max. So if you're at 400,000 max and you go to your builder and you get an idea for what the build will be, and it's 300,000, well, then you have 100,000 to work with to find the land. And so really what we can do is you can get the build and specs and everything lined up, ready to go on the numbers there, and then that's where you would come in to help find the land for them. Yep. And just to reiterate too, so the land plus the build is 5% down.
Right. It's so the whole kit and caboodle. There's one big loan for the entire thing. Yep.
Yeah. And so really what happens is on our first draw, when the construction loan funds, it'll be to essentially purchase the land in cash.
Right.
So from the seller's perspective, they're just going to get, a check cash paid out at closing. Yep. And that's satisfied. And now you own the land.
Or anything like that.
Right. And so, and then from there, the build starts. We can also take a draw at closing for the builders. Okay. And so, on day one, they can take a draw and start foundation the next week.
Yeah, because usually as soon as they're getting money, they're spending money, right? And having walked clients through land purchases specifically for building before, the simpler it can all be, the better. Land contracts are... normally, this isn't 100% of the time, more simple than when you're purchasing a house, just because when you're purchasing a home, there's a lot of other factors that go into it, your inspection process, right? When you're buying land, it's not like you're sending a home inspector out there to go look at a septic system that doesn't exist yet, right? Now, you might have surveys, you might have soil tests, right? Like there are some due diligence and some fact-finding, information gathering stuff that you want to do as a part of a land contract. But that aside, having a bank that's comfortable, with a one-time close, because not every bank does that, right? And even some builders that are out there don't always like one-time closes, but I think that we're starting to see the industry kind of swing away from that a little bit. And obviously it depends on the specific project, but for the client, especially, the one-time close makes the most sense.
Right.
One, you don't have two closing costs, right? Because you're going to pay title company and everybody else in order to close that same deal twice.
Right.
But then the simplicity of it, when you're starting your project and you've talked to a builder, you've got your plans, you've got your cost sheet, all right, this is how much my house is going to cost. Like you said, from that, here's how much I can budget for my land. The day they go under contract on their land, in a perfect world, they should know fairly close what that project is going to cost by the time it's all said and done, right?
Yeah.
And what is the biggest thing that keeps people from building a new home? It's usually they don't know what they don't know, right? They don't feel like they can. And
and I think the fear of thinking they can't afford it, to afford the down. Because even before I went to Bell Bank, if you had asked me, if you want to build a house, hey, 20% down.
Right. It's just the assumption these days, right? And obviously, as people are working through that process, like we already discussed, there's plenty of other complexities in their life that's going on. The financial side of the equation doesn't need to be one more thing that they're stressing out about during that whole process, right? And that's also, just kind of speaking to the other side of the coin here, one of the important reasons why the selection of a builder in this process is incredibly important. I had a contract one time with some clients looking to purchase some land to go ahead and build. And the builder that they had selected, things didn't go great with that experience. They ended up switching builders in the middle of the process. It added layers of complexity that we didn't really need to have in the contract, right? And it got itself sorted out. But, when someone's looking at starting this whole process, it is multifaceted on the people that they're working with, and having the right people in your corner is such a huge part of why we're having this conversation today, right? Because your builder, your lender, realtor, if that's involved in a part of the process, those three things can make or break a situation pretty easily, right? And so you need to make sure that you've got the right people for the job who have the right solutions to overcome objections, deal with problems, right? And all of that is to transfer that headache and that stress away from the client and make their life much easier, right? So we're bringing flexibility to the conversation, knowing good people in our industry here in town. You and I are both connected with builders. We've had those conversations. We know people to call, right? All of that should streamline and ease the overall process for the client. So
one thing on that too is, so we also protect the buyer we have to approve the builder as well. So the builder has to go through an application process with us if they haven't done a loan yet. And we need to make sure that they're properly insured. They've built houses before. Yeah.
It's not Cousin Eddie and he's got a hammer and some 2x4s.
As much as I love them, but we can't let this be their first build, or they need to have very good experience, either working for someone or something.
Come from years of experience, right?
Yes. And then set up with the title company, like a proper draw process.
Right.
Because one thing you mentioned is the one-time close, it's a little bit more in depth than just doing a normal commercial loan through a bank and refining at the end. But, on the financing points, it's 0.25% origination fee compared to 1% normally.
You're saving money there.
It's fixed. So we have a 5.99 interest rate compared to prime is, I think, still 7.25, somewhere around there. And so, and then they're making interest-only payments the whole time it's being built. And so whatever they have drawn out is what you make an interest-only payment on. Right. And so there's just extra layers to protect them along the way. And on the contrary, there's extra layers to protect the builder as well. Because, this is their mortgage. The only way out of this is to finish it and sell it or foreclose. So there's a ton of risk on the buyer as well to make sure the project goes through. And so really by doing it, it kind of just keeps everything glued together and make sure, that we're not wasting anyone's time
and the general public just isn't used to dealing with these things, right? When they're looking at, okay, I'm going to build my dream home, right? Or hey, even a first home, right? Like they don't know what they don't know. Unless you're in school for this or working for a builder, right? Like, you can have a lot of theoretical knowledge, but when you actually get into the trenches and start the process, things can go awry very quickly. And the bank making sure, a phrase that I use in my life all the time is trust but verify. Like, okay, you're telling us that you're a quality builder, right? And we've got, the buyer here that we're trying to represent and protect, and also represent and protect the bank. The bank's giving the loan on it. They're cutting a check. We want to make sure that it's done right. And like you said, at the end of the process, so that way they have the home that they want, and they're not coming up short and missed expectations and frustrated with the process, because that's not good for anybody, right? You're spending usually hundreds of thousands of dollars to build your new home. At the end of that process, you want it to be nice and built correctly, right? So, and the nice thing about that verification is it's coming from inside the industry, from people who know better, right? This isn't, it's not like the first loan that Bell Bank signs after this podcast is filmed is their first construction loan. You guys have been doing it for a long time, right? So, yes, that verification is definitely important, and just working, like I said, with people in the industry who have invested time and resources to make sure that they have those solutions in place. So, when it comes to, the build process in general, you mentioned draws. So, for those of you in the audience who don't know what draws are, can you share a little bit of information on what that looks like, just so that way they have a better understanding during the actual process?
Yeah. So you'll have a cost sheet set up with the builder, right? It'll say, depending on where you're building, maybe septic, 15,000, foundation, 30,000,
right?
Whatever it is. And so the draw process, it's going to be a natural progression of a house, right? So we're going to start with foundation.
Yeah, you don't put the roof up first.
And then we're going to go to framing. We're going to go to roof. We're going to go to the siding, moving along in the house, moving to the interior. And so what happens is in the draw process is that, let's say at closing, they're going to take a $30,000 draw for a foundation. So what that means is that the builder is saying, hey, I want $30,000 of your money. And then the bank signs off on it. The buyer signs off on it, and then the builder signs off on it, and then they will get a check to go and do their foundation work.
Correct.
And then so you're going to make an interest-only payment. So whatever the math is on that, but it'd be, so you're just going to take $30,000 at a 5.99 interest rate and divide it by 12. And that's what your payment is for the month. And so as we progress further along into the build, your payment gets higher and higher until eventually what happens is whenever we get within 60 days of closing, so I basically call and say, hey, house looking done. Like, we're there and everything. Then I can go in and modify the loan to be whatever the current market rate is. So if rates are at 5.5, then you get a 5.5 rate. And there's no cost associated. There's no refi. There's really nothing that's done besides you just sign a piece of paper saying this is my new rate.
Of course.
Then on the contrary, if rates go to 10% during your build, well, you're qualified as 1% higher than whatever the market rate is now. So I think market is like 6.125, maybe for a conventional, something like that. So you'd be at a 7.125. And if rates go to 10%, you can only go up to 7.125.
You're protected.
So you're protected on that end, because last thing you'd want is to go through 9 months of a build and your payment is $700 higher than you thought it would be.
That's some sticker shock for a lot of families out there.
So on the qualification, like, hey, this is the absolute worst. Based on market, probably not going to go there. Ideally, we're going to go the other way. But if so, this is what it would be. So you're protected on that end. So there's really only upside. I mean, your rate can go lower, but it can't go extremely higher. But rates of 4%, you're getting 4%.
And just, this whole process, like I said, I don't know how much the general public understands about it, right? And so, for, again, the audience, hopefully this is providing information that makes all of this seem a lot more comfortable, right? Like the draw process. Again, you've got verifications in place. It's not like the money from your loan is going to be taken and it's just going to disappear into the ether. No, okay, here's a cost sheet with an estimate from approved subcontractors, like those sorts of different things. Whoever's doing this portion of the build, this is based off of real numbers for your house. Okay, we're writing a check for that. It's going to your verified builder who's gone through the application process, right? Not that there's, I'm not trying to imply that there's a lot of shady things going on, but at the same time, like, when you're doing things appropriately and you're doing them by the books, they should come with a certain amount of formality to it, right? And the nice thing about that is, like you said, the buyer has to sign off on it. So they know when the money's getting cut. They're aware that those checks are happening. They're aware of where things are at in the build process, right? But it's also not beholden upon them to go out and source contractors and estimates and turn that in, right? Because yes, there are plenty of people out there who want to be their own general contractor, right? But like you said, for Bell Bank, that's not the case. Just because, by and large, most people aren't qualified to do that, right? And there are plenty who are, right? I don't want to take anything away from them. This just isn't a conversation specifically for them because that's not the norm, right? In today's world, you want to build a house, you hire a builder, right? So, now, obviously, construction loans, the construction process, it can take some time, right? So one of the nice things about the one-time close is, let's say a build takes 9 months, buying the land on the front side takes another month, 45 days. So you're talking about the better part of a year in that process from start to finish, right? And that's not including any conversations on the front side before you start signing paperwork. The thing about the one-time close, once they close, is it situation normal as far as their finances go? So that way they, like, if their car breaks down 3 months into the build process, can they go out and they can go get a new vehicle, or is that going to impact their situation?
Well, so that's another thing too. So once it closes, it's done.
Right.
So once we do the, the 30, 45 day window and you have the authorization to start the draws, we don't look at any other financing.
Perfect.
So it also protects you too, because on a traditional loan, they're going to come in and do a refi. And if you don't qualify, you're going to be stuck with whatever the bank gives you on your terms.
Right.
Which could potentially be a ARM loan, could be a balloon payment. I mean, you could get put in a bad financial situation, whereas with the one-time close, it's
you only got to worry about the first, like I said, at worst, maybe 60 days, of staying within the parameters of what qualifies you for that loan. Because how many people can accurately say, I have 100% confidence that I'm not going to have a rainy day. Nobody's going to lose a job. I'm not going to get in an accident. I mean, look at Southwest Missouri. We just had that hailstorm roll through here. If you were in the middle of a construction process, in the middle of all that, and now you got to go finance a brand new vehicle. That's obviously not going to be a great conversation to have, right?
Right. Or there's situations too that I've run in the past where there's, maybe there's a guy who works in masonry, it's like super well qualified, gets a really good opportunity to go do some 1099 work. And now your income doesn't qualify anymore.
Right. It's
even
changed.
though you're probably making more money.
Right.
But when we come in and do the refi on the construction at the end, I mean, it's kind of like, hey, we can't use the income anymore.
Variable income that's not, documented. You're self-employed now, lending changes. And, obviously, again, for those of you who don't know, being self-employed is a lot of fun when you're trying to get a loan. So all of that just makes, again, the one-time close that much more appealing, because when you're off to the races, like you said, as soon as those draws start, situation is normal, right? You just got to make sure you stay on top of things and get the build process completed. But it's not like you're living. I deal with it talking to buyers all the time when they're going through the loan process. They're so anxious about making a mistake. And again, most of them don't know what even really qualifies as a mistake. And so, they're like, can I buy groceries still? And you're like, yeah, that's normal, right? Like, by all means, I don't want you to starve to death in the next 2 months, right? But just having that surety, once they go to the closing table, they know what their numbers are, they sign, things are done. Like, that just takes, again, a lot of the complexity, a lot of the unknown out of that situation, right? So what are you seeing as far as like trends right now here locally? For example, a couple weeks ago at the Parade of Homes, I'm on the committee for the parade, and like we had a barndominium in the parade. One, the general public raved about it. The builder that was involved with that, they had a wonderful experience. They're very happy that they put that product into the parade. But obviously, from a macro conversation when it comes to lending, especially with construction, are you seeing any new trends kind of changing, where things are headed? Anything new in our industry?
Yeah, I mean, really, So pole barns and barndominiums. I mean, it's really just trying to find a more affordable way to build.
Right.
Right. And so pole barns and barndominiums, those are the same financing for us. Nothing changes.
Again, huge information. Not always the case.
Yeah. So that same thing, 5% down financing, conventional for a barndominium or a pole barn. The real reason those were a problem for a while was comparables for the appraisals.
Right.
And there's enough now, especially here, that finding comparables really no different.
Yeah, 5
they might
years
have to go
ago,
out a little bit more, but yeah.
A lot of lenders out there did not want to touch them because they knew it was going to be a headache trying to get it to closing, right?
Yeah, yeah. And then the other growing is modular homes. So built off-site. Those are the same thing. We can do 5% down. With the manufacturer, it's a little bit different when it comes to the draws and everything because obviously they're building it off-site and then delivering it.
Right.
So there's a lot of different on the back end. Yeah. But I've done modular homes as well.
That's actually, I'm glad that you brought that up because for those of you out there who don't know, modular and mobile homes are very different things, right? And our society, at least in my exposure to it, tends to use those two words interchangeably, even though they are very much not interchangeable. Now, yes, like you said, a modular home is built on site. It is brought to the property. It is actually finish assembled there, right? And there's usually some things that go into that process, some finish work and whatnot. But it is one of the alternatives that we're looking for and finding to try to bring affordability back into the build process, right? And we had 3 great modular homes in the Parade of Homes a couple weeks ago, 3 Stone Homes out in Rogersville. They do excellent work. Daniel, the owner, is a very, very enjoyable human being to talk to. He and I have had some great conversations. But as we're discussing new construction, right? Like I want to try to take as much of the stigmatism out of the conversation of, oh, in order to build a new house, you're going to have to spend, $600,000-$700,000 at least. And that's just not the case, right? Now you can, and depending on what finishes you want in a house, you might get that expensive really quick and in a hurry, right? But, when I'm talking to either first-time home buyers or somebody looking to purchase their second home, right? They might be younger. They're not at the, spearhead of their career where, they're making all the money that they're hoping to make someday. And they're looking for options and they're trying to figure out, okay, how do I get as close to what I want as possible, as realistic as possible? And for most people, it's not like you can build half the house, just for the sake of new construction. And so they compromise somewhere. Well, I don't like to compromise. Obviously it's a part of everyday life, but the fewer that we can make for our clients' sake as a part of this process and still get them what they want at the end of the deal, how is that not a win-win for everybody? Right. In modular homes, they're doing some really cool stuff, 2-3-story homes. They've got all the bells and whistles that you've come to expect. It just is a different process. There are some specific nuances about it, but it does make for a more affordable project at the end of it. Right. Yeah.
And it allows us to have a really wide array of the ability to build. Right. I've done loans as small as $105,000. For a little cabin that's coming down on Table Rock Lake, right?
Nothing complicated.
And then we've done as big as I think don't quote me, I think our limit is $2.5 million for the construction. So you can go as big or as small as you really want it to.
$2.5 million in the Ozarks gets you a lot of house, right? Or a lot of land with a little house, but still, dealer's choice. But I mean, like you said, it's just there is a wide variety, and you're dealing with people in every walk of life, and so. 105,000, man, that would be kind of fun just to see it come together.
Yeah, and that was one where he owned his own land. Yep. And we're closing that next week, and his cash to close is, I think, $45. So they can't get any money back, but we can make it as low as possible.
I mean, if you can't afford $45 on the day of closing, right? Like that's what, like 7 Starbucks coffees these days, pick your heart, right? So if you can give up coffee for a week, we can get you a new house, but you got to have some land. So,
and also too, I don't, whenever you want to get into it. So we also have a VA one-time construction.
I'm glad that you brought this up because it is definitely something we need to focus on. So for those of you who don't know, VA loans are for private service members. It is one of the benefits that they earn as a part of their service to our country. And there are some qualification factors that need to be identified as a part of that, just like service time, active duty days, those sorts of different things. It's not just, okay, your first day as a part of the military that you can just go and buy a house with your VA loans. It doesn't quite work like that. But
right.
as a part of the benefits, one, I think it's something that everybody should utilize given the option, right? Like otherwise you're just leaving that benefit that you've literally spent your life earning.
Yeah.
Hanging out there for no reason, right? But at the same time, I also have had conversations with builders here locally. And again, I think it's an education issue probably more than anything else. But the VA construction loan is a one-time close.
Right.
Not a lot of builders are familiar with the product. And I think maybe just because they haven't had the opportunity to be, because a lot of people aren't aware of the fact that you can build a home with your VA benefits, right?
Yes. Yeah. I honestly thought it was a tall tale.
Really? Yeah.
I mean,
you were in the service. Yeah.
I had people that would ask me about doing a VA construction. I'd say, I know they're a thing, but I don't know who does them.
It's like, oh, great. What is it? The white elephant or something like that?
Something.
Like, the figment you hear about, but no one's ever actually seen one.
So the VA, our VA construction loan is actually insane. And it even helps because even for someone like me who's in the service who has a VA loan on my house, I know me and my wife, we bought our house 3 years ago. And the whole thing I told her was, hey, we'll stay in the house for 10 years, build up a bunch of equity, and then maybe get some land somewhere in there, start working towards it, and then we can build a house eventually later.
Right.
And then going over to Bell and working with our construction team, and learning about the VA construction product. I mean, that's when it sounds too good to be true.